Hello everyone. We are going to explain the section B in accounting part, the recording process. The main topics that will be covered in this presentation are the following: the account, debits and the credits of account, accounts normal balance, the chart of accounts, the general journal and journalizing, the ledger and posting, and finally the trial balance. What is an account? It is a record of increases or decreases in a specific asset, liability, or equity item. For example, the accounts payable, the cash, the accounts receivable, the building, or whatever. The standard form of the account is called T account since it looks like the capital letter T, and in the middle we have the title of the account, we have the left side, and we have the right side. The left side of the account is called debit and the right side of the account is called. Now we know that the left side of the account is the debit and the right side of the account is the credit. But what do we mean by debit and the credit? Debit and credit are only signals to indicate where the side the account should increase or decrease. Some accounts increase in debit, so they decrease in credit, and some account increase in credit, so they decrease in debit. Actually, there is a common abbreviation for debit and credit. Debit could be abbreviated as DR dot and credit could be abbreviated as CR dot, exactly as you see DR and CR dot in red color. At a later stage, I will explain how to fill the left side and the right side of the account and how to transfer amounts to the accounts. But for now, I want you to know that entering the amount on the debit side of the account is called debiting, and entering the amount on the credit side of the account is called crediting. However, when the sum of the debit amounts exceed the sum of the credit amounts, the difference between the sum of the debit and the sum of the credit is called debit balance. And the debit balance is located at the end of the left side or the debit side. And when the sum of the credit amounts exceed the sum of the debit amounts, the difference between the credit amounts and the debit amounts is called the credit balance. And the credit balance is located at the end of the right or the credit side. Each account has a normal balance, but what is an account normal balance? The normal balance of an account indicates the side where the account is positive or where the account is increasing. Some accounts have debit normal balance. This means that these accounts increase in debit and decrease in credit. Other accounts have credit normal balance. This means that these accounts increase in credit and decrease in debit. I'd like to note that accounts normal balance is a very important part, so I urge you to study it very well. We start with accounts having debit normal balance. The accounts that have a debit normal balance, so they are increasing in debit and decreasing in credit, are all assets, all expenses, and all dividends. When we say assets have a debit normal balance, this means that all assets have a debit normal balance, so whether these assets are current assets or long-term investment or PPE or intangible assets. and this is for expenses as well, for salaries expense, for utilities expense. All these accounts have a debit normal balance, and this is for dividends as well. Regarding the accounts that have a credit normal balance, so they are increasing in credit but decreasing in debit, are liabilities, capital stock, revenues, and retained earnings. So when we say liabilities have a credit normal balance, so all liabilities increase in credit and decrease in debit. All liabilities such as current or long-term liabilities, so for example accounts payable, unearned revenues, long-term loans, bonds payable, all these liabilities increase in credit. And this is for capital stocks and for revenues and for retained earnings as well. The chart of accounts is the list of all accounts used by an organization. It is used by the accounting software to aggregate information, and it is sorted in order by account number. So the chart of accounts gives a code to each account. This code might be numeric, might be alphabetic, or might be alphanumeric. The General Journal is the most important accounting book. It reflects the complete effect of all transactions. All transactions should be recorded in the journal in their chronological order. This means that transaction that happened first will be recorded first. For a transaction, we will record in the General Journal the following: the date of transaction, the titles of the accounts affected, little explanation about the transaction, the references of accounts or the codes given for each account, and in two different columns, the debit amounts and the credit amounts. Actually, when preparing the General Journal, we must use the double entry system. The double entry system states that for each transaction, minimum two accounts should be affected. Journalizing is recording the transactions in the journal. A separated journal entry should be made for each transaction, and each entry includes the same information previously explained in the previous slide. These information, as previously explained, are the date of the transaction, the title of the accounts, and the amount in debit and credit columns, and a brief explanation of the transaction. So each individual record for each transaction is called a journal entry. And there are two types of journal entries. If the entries involve only two accounts, one in debit and one in credit, this is the simple entry. And if the entries involve more than two accounts in journal, this is the compound entry. In the next two slides, I will be giving two examples on journalizing, one for the simple entry and one for the compound entry. Before reading the example, let's have a look to the general journal form. As you can see, we have 5 columns. The first column is the date. In the date column, we record the date of the transaction. The second column is the account title and explanation. In this column, we record the accounts affected and a little explanation of the transaction. We can realize here that two accounts affected are equipment and cash, and a little explanation is purchase of equipment for cash. The third column, the reference, and in this column we enter the code of the accounts, and I will not be filling this column because we can give any code to each account. The debit column, in the debit column we record the amount that should be debited, and on the credit column we record the amount that should be credited. The example is, on July 1st, 2019, Adam purchased an equipment for $20,000 cash. So what's going on here? We purchase an equipment and we pay cash. When we purchase an equipment for 20, the equipment must be increased by $20,000. And when we pay a cash of 20, the cash account must be decreased by 20. Now we know that the two accounts affected are the equipment and the cash account. But which account should be recorded in debit and which one should be recorded in credit? To have the answer on this question, we must know the normal balance. In this example, the two accounts affected are equipment and cash. Both are assets. Remember that assets have a debit normal balance, so all assets increase in debit and decrease in credit. So, since equipment increased by 20, equipment must be recorded in debit. And since cash decreased by 20, cash account must be recorded in credit. Now let's prepare the journal entry of the example. We start by the date column. In the date column, we enter the date of the transaction, which is in this example on July 1st, 2019. Now let's go to the second column, the account title and explanation. Before we start, we should know that the debit account is entered first at the extreme left margin, and the amount of the debit account is recorded in the debit column. The credit account should be intended and entered on the next line, and the amount of the credit account is recorded in the credit column. In our example, the account that should be debited is the equipment. That's why equipment is recorded first, and it is recorded in the top at the extreme left margin. And the amount of the equipment is 20. We can realize that 20,000 in the debit column as well. The second account affected in this transaction is cash, and as we previously explained, cash should be recorded in credit, so that's why cash in the next line, and it is intended a little, and the amount of the account is 20,000 in credit as well. And a little explanation is made between brackets, purchased of equipment for cash. And this is the journal entry for our example. I'd like to note that this kind of journal entry is called simple entry since it involves two accounts only. Now let's do another example on journalizing. On July 15, Adam performs a service totaling $30,000 for a customer. So we make a service for a customer totaling $30,000. I'd like to note when we perform a service to a customer, we use the account service revenue. And this is whether the transaction was on account or was for cash. Adam receives 10,000 cash from the customer and the remainder on account. Since we received $10,000 cash, so the cash account should increase by $10,000. And regarding the remainder, which is $20,000 here, since the total revenue is for 30, we received 10, and so the remainder is 20. The remainder is due from the customer, and so in this case we have customers on account, and we remember that from the previous section, the account of credit customer is the accounts receivable. So we have to use the account receivable in this example. Now, which of these three accounts should be recorded in debit and which in credit? For cash and accounts receivable, both accounts are assets account, and we know that assets account have debit normal balance, so they increase in debit and decrease in credit. For cash, we receive $10,000 cash, so the cash would increase by $10,000. For accounts receivable, it is increased by 20,000 since it is the credit customer's account. And in this example, the amount remains from customer is 20. So cash and accounts receivable should be recorded in debit. For service revenue, it is a revenue account, and we know that all revenues account have credit normal balance, so they increase in credit and decrease in debit. Service revenue always increases when we perform a service for a customer. And in this example, we are performing a service for a customer, and that's why the service revenue would increase in this example. And since it has a credit normal balance, so service revenue will be recorded in credit. Now let's prepare the journal entry for the example. The date is July 15, 2019. Let's start by accounts. We have accounts receivable and cash should be recorded in debit as we previously explained. So they are in the top and they are in the extreme left margin. The amount of cash is $10,000 debit and the amount of accounts receivable is $20,000 in debit as well. For service revenue, and since it is in credit, so it is in the next line and it is a little bit intended, and the amount of service revenue is $30,000 in credit. This example is a case of compound entry since it involves three accounts: the cash, the accounts receivable, and the service revenue. A final note regarding the journalizing is in the journal entry we do not use the dollar sign. We put the amount as it is without the dollar sign. Now let's move to page 12 on your book to solve exercise 1. Before we start solving exercise 1, I urge you to put in front of you a paper and to write the normal balance of each account on this paper. Actually, when doing journalizing, this will make our work easier. In this exercise, we have list of transactions and we have to journalize these transactions. On March 1, invested $20,000 cash in the business, an exchange of common stock. What does this mean? This means that we sold common stock of $20 cash, so we received $20,000 cash. So when we received $20,000 cash, the cash would increase and it is an asset account. So when it is increased, we have to record it in debit. Regarding common stock, when we sold common stock to the market, the common stock would increase. And the common stock is a capital account which has a credit normal balance. So when the common stock increased, they should be recorded in credit. So in this case, we have cash and debit for $20,000 and common stock for credit $20,000. On March 3, purchased a golf land for $15,000 cash. This price of 15 consists of three items, which are land for 12,000, shed for 2,000, and equipment for $1,000. The land, the shed, and the equipment are fixed assets. So when we purchase these fixed assets, the assets increase. And when the assets increase, they recorded in debits since assets have debit normal balance. So first, we have land, we have shed, and we have equipment in debit. Land for 12,000 in debit, shed for 2,000 in debit, and equipment for 1,000 in debit. For cash, as they informed us, the price of these three fixed assets, 15,000, is paid from cash. So the cash account is decreasing in this case, and cash account is an asset as well, which has a debit normal balance. So when cash decreased, the cash should be recorded in credit. On March 5, paid advertising expenses of 700. On this date, we are incurring advertising expenses of 700, and every time we incur an expense, the expenses would increase. Expenses have debit normal balance, so when they are increasing, they should be recorded in debit. So in this date, we have advertising expenses in debit for 700. On the other hand, we paid 700 for this advertising. Since we are paying, the cash would decrease, and as previously explained, when the cash decrease, it should be recorded in credit. On March 6th, paid cash 600 for a 1-year insurance policy. In this case, we are purchasing 1-year insurance policies. Since the insurance policy is for 1 year, so it is paid in advance for 1 year. So it is considered as prepaid insurance and not insurance expense. The prepaid insurance is an asset, and when we purchase a prepaid insurance, the asset would increase and the prepaid insurance increase, so it is recorded in debit. When paying cash, the cash decreased and it is recorded in credit. So in this example, we have prepaid insurance for 600 in debit and we have cash 600 in credit. On March 10, purchased an equipment for 1050 from Taylor Company, payable in 30 days. Here we are purchasing an equipment, so the equipment are increasing as they are assets, they are recorded in debit. So we have in debit equipment 1050. For credit now, we are purchasing this equipment on account. So when we purchase an asset, an account, we use the account payable. The accounts payable, as previously explained, is the account of our suppliers. In this case, since we are purchasing an equipment on account, the account of supplier, which is accounts payable, increase, and accounts payable is a liability account, has a credit normal balance, so when the accounts payable increases, it is recorded in the credit. So the journal entry is we have on March 10 in debit equipment for 1050 and in credit accounts payable for 1050. March 18 received 1100 in cash for golf fees. Between the brackets, the company informed us that golf fees are recorded as service revenue. So in this example, we have 1100 cash from service revenues. As I informed you, when we make a service for a customer, always service revenue would increase. So we have to record the service revenues in credits since they are revenues and all the revenues have credit normal balance. On the other hand, we received 1100 cash for this revenue. So the other account is the cash, and the cash is increasing here since we are receiving money. When cash increases, it is recorded in debit. So the journal entry will be in debit cash 1100 and in credit service revenue 1100. On March 19, received $5,000 cash from customers for services expected to be completed by the end of the current quarter. On this date, we received 5,000 from a customer cash, so the cash would increase. On the other hand, this cash is receiving from customers for services but not completed yet. When receiving cash for services not completed yet and it will be completed in the future, we use the account unearned service revenue and it is a liability account. And in this case, the unearned service revenue account would increase. Unearned service revenue is a liability account, has a credit normal balance, so when it is increased, it is recorded in credit. The entry will be cash in the debit 5,000 and the unearned service revenue in credit 5,000. On 25, paid cash dividends of 3,000 to stockholders. We have on this date dividends payment to stockholders. When we pay dividends, the dividends increase, and dividends has a debit normal balance, so they recorded in debit when they increase. And on the other hand, we are paying cash, so cash would decrease and recorded in credit. The entry is the entry is dividends and debit for 3,000 and cash and credit for 3,000. On March 30, paid salaries of 250. On this date, we are paying the salaries to our employees of 250 from cash. So the cash account will decrease in credit, and the salaries expense is increased in debit. So the entry is salaries expense in debit 250 and the cash and credit for 250. Another transaction on March 30, paid Taylor Company in full. Taylor Company is our supplier when we purchase an equipment on March 10. So please refer to March 10. On March 10, we have the accounts payable and credit for 1,050. Now we have to pay this 1,050 to the supplier. So when we pay the amount due to the supplier, the cash account will decrease in credit. And the accounts payable, which is the account of the supplier, will decrease since we are paying this account. So the journal entry will be accounts payable and debit for 1,050 and the cash and credit for 1,050. The last transaction on March 31 received 2,100 cash for golf fees or for service revenue. Actually, this transaction is similar to the transaction of March 18. We perform a service for cash. So the cash increased in debit and the service revenue increases in credit for $2,100. Now we have finished explaining the general journal. Let's go to the general ledger. Actually, the general ledger is prepared directly after the general journal. It is the entire group of accounts with their balances maintained by a company. It consists of all the accounts of assets, liabilities, and equity. Actually the amounts of the ledger are transferred from the journal. Transferring the amounts from debit and the credits of the journal to the general ledger is called posting. We have two types of general ledger. We have the T account ledger that is previously explained, and we have the three-column ledger. And as we said, the amounts are transferred from the general journal to the ledger, and this is called posting. The T account has two sides, the left side or debit side and the right side or the credit side. And the three-column ledger, actually it is called the three-column since the calculations will be made under the three columns, the last three columns, which are debit, the credit, and the balance. We have also the date. We fill here the date of the transaction and explanation. We will leave this the rows of explanation empty for now. To explain how to transfer the amounts from the general journal to the ledger, we will solve the exercise to page 14. Please, when solving this exercise, I prefer to put the general journal of exercise 1 previously solved in front of you because we need to use the general journal when transferring the amount to the general ledger. Before we start, I prefer to put the sign plus above the debit and the sign minus above the credit. You can see them in the red color. Why we put these signs above debit and the credit? These signs are assigned according to the normal balance of the account. We have in this case the cash account. The cash account has a debit normal balance, so it is positive in debit or increase in debit, and it is negative in credit or decrease in credit. That's why I put plus on debit and minus on credit. In this exercise, it is required to post the cash account and the accounts payable to the general ledger using the journal of exercise 1, page 12, previously solved. We will start by the three-column ledger of cash account. To start transferring the amounts from the journal to the ledger, we need to put the solved journal of exercise 1 in front of us. Have a look to this journal and search for cash since we are preparing the ledger of cash account. We find that the first date the cash account appears in the general journal is March 1, and it was in debit for $20,000. How to fill this information in the general ledger? In the first row, we have the date. The date should be similar to the journal, which is March 1. Explanation, we remain this cell empty. In debit, we put the same amount in the general journal. The cash in the first date was 20, so we put in debit 20,000 because in the general journal we have the cash in the debit for $20,000. So here as well, we transfer the 20,000 from the general journal debit to the general ledger debit. And finally, we fill the balance column by 20,000 since it is the first date. Always in the first date, the balance is the same as credit or as debit. Here we have the debit at 20, so the balance should be 20 because no calculations are made in the first row. Now, what is the next date that the cash appears in the general journal? We look to the general journal and we find it is on March 3. In March 3, the cash in the general journal is in credit for 15,000. We need to transfer this credit amount to the ledger. So in the ledger, we enter the date, which is March 3. In the credit column, we put 5,000 since the cash was credit 5,000 on this date in the general journal. And now, how to calculate the balance of the current date. To calculate the balance, we take the balance of the previous date, which is 20, minus the credit of the current date, which is 15. Why minus? Minus because for cash, when the amount is a credit, this means it is minus. Please refer to the red sign above credit. It is minus. So the balance of this date is 20,000 minus 15,000 equal 5,000. After March 3, we look to the general journal and we find that the cash appears again in March 5. It was $700 in credit. So we need to transfer this credit amount of 700 to the general ledger. We put the date March 5 and the 700 in the credit as well, and we calculate the new balance. We take the balance of the previous date, which is 5,000, minus the 700 of the current date equal 4,300. And I'd like to note again that minus 700 because the amount is in the credit, and when the amount in the credit it is minus, and this is for cash. The next date the cash appears in the general journal is on March 6th. It is in the credit as well for $600. So we transfer this 600 to the general ledger, and we make the following calculation to find the new balance. 4,300 minus 600. The new balance is 3,700. Next date the cash account appears in the general journal is on March 18. On March 18, the cash was in debit for 1,100. So we put the amount 1,100 in debit, but how to find now the new balance? We take the previous balance, which is 3,700, plus the 1,100 to get a new balance of 4,800. Why plus in this date? Because the 1,100 is in debit, and in debit, when the cash is in debit side, so it is plus. Please refer to the plus sign in red color above the debit. This means that when the cash is in debit, we have to add the amount to the previous balance. On March 19, the cash is in debit as well for $5,000. We transfer this debit amount of 5,000 to the general ledger. We put 5,000 in debit, and to find the new balance, we take the previous balance plus, which is 4,800, plus the 5,000 of the current day to have new balance of 9,800. The next date is March 25. We have in the general journal cash account in the credit 3,000. We transfer this 3,000 to the credit of the general ledger, and we find the new balance as following: 9,800, which is the balance of the previous date, minus 3,000 to get 6,800 as new balance. March 30, the cash account was in credit in the general journal for 250. We transfer this 250 to the ledger in credit, and we make the following calculation: 6,800 of the previous balance minus 250 equals 6,550. On March 30, we have another transaction for cash. We have the cash in credit for 1,050. So we transfer this credit amount to the ledger, and we put 1,050 in credit column of the ledger, and we find the new balance, which is 6,550, the balance of the previous date, minus 1,050 equal 5,500. On March 31, the cash account appears in the general journal in the debit for 2,100. Then we transfer the 2,100 debit amount to the general ledger. We put 2,100 in the debit, and we find the new balance. But here we take the previous balance, 5,500, plus 2,100, since the balance here is in debit, and we find the new balance 7,600. Now, to prepare the ledger for accounts payable, let's put the sign plus and minus. Accounts payable is a liability account. It has a credit normal balance, so it increased in credit and decreased in debit. That's why for accounts payable, the sign minus is above the debit and the sign plus is above the credit. Now let's look to the general journal to find on which date the accounts payable appears. We found that the first day the accounts payable appears in the general journal is on March 10. On March 10, we realized that the accounts payable was in credit for 1,050. So we transfer this credit amount of 1,050 to the credit column in the general ledger. Then we fill the balance column in the same amount of 1,050, since it is the first row of the general ledger. The next date in the general journal the accounts payable appears is on March 30. On March 30, the accounts payable was in debit for 1,050. So we transfer this debit amount to the debit column of the general ledger to put in the debit 1,050. Now, how to find the balance? We take the previous date balance, which is 1,050, minus 1,050 the debit amount of March 30, so the balance equals 0. Why minus? Minus because for accounts payable, when the amount in debit, so it is minus, and when in credit, it is plus. In this date, the March 30, the amount was in debit, so we need to take the previous balance minus the amount of the current date. Now we have to prepare the general ledger for cash and accounts payable, but we have to use the T account ledger form. We start with the cash account. Actually, preparing the ledger using T account is much easier than using the 3 columns. For cash account here, we have the debit side and the credit side. We always need to refer to the general journal to prepare the ledger. However, we look to the general journal on which date the cash account appears in debit. We realized that on March 1, on March 18, on March 19, and on March 31. On these dates, the cash account was in debit. So we enter these dates under the debit side. On March 1 was 20,000 in debit. On March 18 was 1,100 in debit. March 19, 5,000, and on March 31 was debit 2,100. The total of the debit side is 28,200. On which dates the cash account appears in credit? We find that on March 3, the cash account was on credit for 15,000. On March 5 was in credit 700. On March 6 was in credit 600. On March 25 was in credit 3,000. March 30 was in credit as well 250, and on March 30 was 1050 in credit. So these dates with their amounts are under the credit side. The total of the credit side is 20,600. We need to find the balance of the account. As previously explained, if the total of the debit side exceed the total of the credit side, the difference between the totals is a debit balance, and it is located at the end of the debit side. In our example, the total of the debit 28,200 exceeds the total of the credit to 2,600. So we have a debit balance. To find the debit balance, we find the difference between the two sides. So we make the following: 28,200 minus 20,600, and we have a debit balance of 7,600. For accounts payable, we can realize that on March 30, the accounts payable was in debit 1,050. So we put the date with the balance under the debit side, and on March 10, the accounts payable appears in credit for 1,050. So we put the date under credit with the amount. In this case, the balance is 0 since the debit side equals the credit side. I'd like to note that for both types, the 3 column and the T account, the ending balance should be the same. For cash, when we use the 3 column, the ending balance, I mean the balance in the last date, was 7,600. And when we use the T account, we find that the debit balance is 7,600. So it is the same. For accounts payable as well, using the 3 column or using the T account, the balance is 0. After finishing the general ledger, we have to prepare the trial balance. The trial balance is the list of all accounts used by the company at a given time. The purpose of preparing the trial balance is to prove the equality between the debit and the credit after the posting. And the trial balance help discover the errors in journalizing and in the general ledger. However, to prepare the trial balance, we have 3 procedures. We have first to list the accounts, all the accounts with their balances. We have to totals the debit columns and the credit column. And finally, we have to prove the equality between these two columns. How to list the accounts in the trial balance, and what is the order of the accounts in the trial balance. We have to start with assets, then liabilities, capital stock, retained earnings, dividends, revenues, and finally expenses. Regarding the accounts balances or the amounts of the accounts, we put the balances of the assets, the dividends, and the expenses in the debit column, since these accounts have debit normal balance. Regarding the amounts or the balances of the liabilities, the capital stock, the retained earnings, and the revenues accounts, we put them in the credit column since these accounts have a credit normal balance. Now let's solve exercise 3, page 16. We have a list of accounts with their balances, and it is required to prepare the trial balance and to list the accounts in their normal order. To follow the normal order in the trial balance, which is assets, liabilities, capital stock, retained earnings, dividends, revenues, and expenses, we have to know the classification of each account. So we have accounts payable, it is a liability account. Accounts receivable, assets. We have the capital stock, we have the cash, which is asset, we have the dividends, we have the fees revenues, which is revenue, insurance expense, it is expense. We have the land, which is asset, miscellaneous expense, it is expense, notes payable is a liability account, prepaid insurance is asset, rent expense, it is expense, retained earnings is retained earnings, supplies, asset, supplies expense, expenses, unearned rent, liability, utilities expense, and wages expense are expenses. So this is the classification of the accounts given. Now, where to put the account balances, the amounts? We put them in the debit column or in the credit column. Actually, we distribute them between debit and the credit columns according to their normal balances. Accounts that have debit normal balance, we put them in the debit column which are the assets account, the expenses account, and the dividends. And the accounts that have a credit normal balance, we put them in the column of the credit, which are the liabilities, the capital stock, and the revenues account. Now let's list the accounts with their balances. We start with asset. We have cash, accounts receivable, supplies, insurance, prepaid insurance, and land. These are the assets. We start with them, and we put their balances in the debit since assets have debit normal balance. Then we continue with liabilities. We have notes payable, accounts payable, and unearned rent. Their balances should be stated in the credit column since the liabilities have a credit normal balance. Then we have the capital stock. The capital stock has a credit normal balance. We put the amount 8,000, which is the balance of the capital stock and credit. Then the retained earnings. The retained earnings has a credit normal balance as well, and we put the retained earnings in the credit column. The dividends has a debit normal balance. We put the 16, which is the balance of the dividends in debit. The revenues, we have fees revenue, which has a credit normal balance. So we put the balance of fees revenues in the credit columns. And finally, we list all the expenses, the insurance expense, miscellaneous expense, rent expense, supplies expense, utilities, and wages expense. We put them in the debit since they have debit normal balance. Now we finish the listing of the accounts. We total the debit column and the credit column. The total debit should equal to the total credit. Now let's prepare exercise for page 18 on your book. We have a list of transactions and we have to journalize these transactions, then prepare the ledger and then prepare a trial balance. Let's start with transaction A. Issued capital stock to Lynn Cantwell in exchange for $25,000. In this transaction, we sold the common stock to the market and we take 25,000 cash. So the cash account increases and recorded in debit since it has a debit normal balance, and the common stock increases and recorded in credit since it has a credit normal balance. Transaction B, paid July rent for office and workroom, 2,750. Here we incur a rent expense, so rent expense increases and they have a debit normal balance, so they recorded in debit. And since we are paying the rent expenses, the cash account decreases and it has a debit normal balance, so when it decreases, it will be recorded in credit. Transaction C, purchased automobile for $30,000. Paying 4,000 cash and giving a note payable for the remainder. We have three accounts affected in this transaction. We purchased automobile, so automobile is like automotives, so it is in fixed assets, so it is assets. So when we purchase an automobile, the automobile will increase and will be recorded in debit since it has debit normal balance. For cash, we are paying $4,000 cash, so the cash will decrease for 4,000. And since cash has a debit normal balance, so when it decreases, it will be recorded in credit. So we have cash and credit for 4,000 as well. The third account is a note payable. A note payable is the supplier account with a promissory note or a promissory paper to prove that debt to the supplier. So notes payable is a liability account, increases in credit. So the remainder amount is 30,000 minus the down payment, which is 4,000. So the notes payable is 26,000. It is recorded in credit since it is a liability account and it is increased in credit side. Transaction D, purchased office and computer equipment on account for $9,000. Now we have the office and the computer equipment. They are recorded under the account equipment and they are fixed asset. So when we purchase this equipment, the equipment account will increase and it is recorded in debit since equipment is an asset and has debit normal balance. Regarding the second account, we purchase an asset on account, so we have to use the supplier account, which is accounts payable. Accounts payable increase in credit. It has a credit normal balance since it is a liability account. So we have the second account in the credit accounts payable. Transaction E. Paid cash for supplies 1,600. And this date we purchase supplies for 1,600. So the supplies, which are current assets, increased. So they are recorded in debit since they have debit normal balance. And we are paying for supplies 1,600. So the cash account will decrease and recorded in credit. Transaction F, paid cash for annual insurance policies 2,400. In this date, we have annual insurance policies, so it is considered as prepaid insurance since it is purchased for 1 year in advance. Prepaid insurance has a debit normal balance since it is a current asset. So when we purchase insurance policy, we record the prepaid insurance in debit. And we are paying 2,400 for insurance policies, so the cash will decrease and recorded in credit. Transaction G, Received cash from client for services performed 11,150. On this date, we perform a cash service to a client. Since we perform a service, we have to use the service revenue, which is increased in credits. So we record first the service revenue on credit, since all revenues have credit normal balance. Now the second account is cash. Since this service is performed for cash amount, which is 11,150, so the cash account increased and recorded in debit. So we have cash and debit as well. Transaction H. Paid cash for miscellaneous expenses of 300. In this example, we incur miscellaneous expense for 300, so it is recorded in debit since all expenses have debit normal balance. And we pay cash for these expenses, so the cash account will decrease and recorded in credit. Transaction I. Paid cash to creditors on account 3,500. The creditors on account are the suppliers, and the account of the supplier is the accounts payable. We are paying to the creditors or to the suppliers, so the cash account will be decreasing and will be recorded in credit. The second account is the creditors account, which is the accounts payable. When we pay for the creditors, the accounts payable is decreasing. So in this case, the accounts payable is decreasing. And since accounts payable is a liability account and has a credit normal balance, when it is decreasing, it will be recorded in debit. So we have in debit the accounts payable and we have in credit the cash account. Transaction J, paid note payable 550. The concept of this transaction is similar to the last one. Since note payable is the account of the creditors as well, but in this case we gave the suppliers or the creditors a note to prove their debt. However, note payable is a liability account, has a credit normal balance. So when we pay this note to the creditors, the notes payable will be decreasing, and since it has a credit normal balance, when it is decreasing, it will be recorded in debit. So we have in debit notes payable, and the second account is the cash account that should be recorded in credit since the cash is decreasing when we are paying the note payable. Transaction K. Received invoice for advertising service due in August, 1,500. So today we received the advertising invoice. What does this mean? This means that we put an advertising for our company, maybe in newspaper, maybe on TV, whatever. However, today we incur an advertising expense, so we have to record in debit advertising expense. Remember that all expenses have debit normal balance, so when they are increasing, they will be recorded in debit. On the other hand, today we did not pay the amount of this advertising. This amount will be paid in the future during the month of August. So we have to use the creditors account, which is accounts payable. Remember that accounts payable is a liability account that increase in credit. So we have the accounts payable in credit. Transaction L, perform service for credit customers, 17,300. We perform a service on this date, so we have to use the service revenue. I'd like to note that all revenues has a credit normal balance, so when we perform a service to a client, this service should be increased in credit. The second account is the accounts receivable, since we perform this transaction on accounts. So we have to use the accounts of the credit customers. And the account of the credit customers is the accounts receivable, which is a current asset account. So when it is increased, it should be recorded in debit, since all assets have a debit normal balance. Transaction M. Paid salary of assistant 2,200. So on this date, we are paying the salary of the assistant. So we incur a salary expense, and salaries expense should be recorded in debit since it is increasing. And we are paying cash, so the cash will be decreased and recorded in credit. Transaction N, paid the utility bill of July 815. Actually, utilities are considered as expenses as well. So we incur a utility expense on this date. So utilities expense should be recorded in debit since they are increasing and has a debit normal balance. And the cash will be recorded in credit since it is decreasing, and since it has debit normal balance, so it is decreasing in credit. Question B of this exercise is to prepare the general ledger using the three-column form. So we have to transfer the amounts and the accounts from the journal. Keep in mind, and when preparing the general ledger, we have to put the journal in front of us. Every account that appear in the general journal should be transferred to the general ledger. We start with cash. Cash has a debit normal balance, so that's why I put a plus above the debit and a minus above the credit since it is increasing in debit and decreasing in credit. So when cash appears in debit in the general journal, we put the cash in the general ledger in debit in the same date. And when it appears in the credit in the journal, we transfer the credit amounts to the credit columns of the general ledger. For example, in transaction A, the cash amount was 25,000 in the debit, the general journal. We transfer this debit balance of 25,000 from the general journal to the ledger. We put it in debit as well. And always in the first row, the balance is the same as debit or credit, or here 25 in the debit. The next transaction that the cash account appears in the general journal was in date B. In the date B, the cash account was in credit for 2,750. That's why we transfer this credit amount to the credit column in the general ledger. Always for the cash account, when the amount is in credit, and to find the new balance, we take the previous balance minus the amount of the current date, and we find the new balance. The next time the account appears in the cash account appeared in the general journal was in the transaction C. It was a credit as well, so we make the same calculations. Only on transaction G, as you can see, the cash amount was in debit. That's why we added the amount to the previous balance to find the new balance. Some accounts appear only one time in the general journal. We have no problem. We can make a ledger for these accounts. So for example, for capital stock, the capital stock appears only on the date A with a credit amount in the general journal of 25. So we put the date A, the credit we put 25,000, and the balance is same as the credit since it is only one row, and this is same for rent expense and for automobile account. For note payable is a liability account that increase in credit and decrease in debit. That's why I put the plus above the credit and I put the minus above the debit. However, note payable appears the first time in the journal on the transaction C. It was in credit 26, and we transfer the 26 credit amount from the general journal to the ledger, and for the balance in the first row, it is the same as the amount, so 26 and 26. The next transaction note payable appears in the journal is in transaction J. In transaction J, the note payable had a debit amount of 550. So we transfer this debit amount 550 to the general journal, and to find the balance, the new balance, we take the previous balance, which is 26,000, minus the amount of transaction J, so 26,000 minus 550, and we have the new balance is 25,450. The equipment, the supplies, the prepaid insurance, and the advertising expenses. These four accounts have debit normal balance. That's why we put the plus above the debit side and the minus above the credit side. However, these four accounts appear only one time in the general journal. That's why no calculations are made, but we only transfer the amounts from the general journal to the ledger, and we put the same amount in the balance. For account payable, this account appears first time in the general journal in the transaction D. Actually, it was in credit and the balance was 9,000. This is the first row. The balance is equal to the credit as usual. The next time appears the account payable in the journal is in the transaction I. It was in debit. So we transfer this debit amount to the ledger, 3,500, and to find the new balance, we have to make some calculations. We take the previous balance, 9,000, minus the current balance, 3,500, and the new balance is 5,500. Then the next time the accounts payable appears in the general journal in transaction K, it was in credit for 1,500. So we transfer this credit amount to the general ledger. Now to find the new balance, we take the previous balance but plus the new amount 1,500 to get the new balance 7,000. We added the amount in this transaction since the accounts payable increase in credit, as we can see the plus sign above the credit column. The service revenue account appears two times in the general journal. In the transaction G, which was in credit for 11,150, and we have to transfer this credit amount to the general ledger. The second time the service revenue appears as in transaction E was in credit as well for 17,300. Now, you can realize that above the credit I put a plus and above the debit I put a minus since service revenue has a credit normal balance. However, to find the new balance in the transaction E, we take the previous balance plus the balance of the current transaction 17,300, and we find that the new balance is 28,450. For accounts in this slide are the miscellaneous expense, the accounts receivable, salaries expense, and utilities expense. All of these accounts have debit normal balance. That's why you can realize that the plus is above the debit and the minus is above the credit. However, these accounts appear only one time in the general journal. That's why their amount are transferred exactly to the balance. The part C of this exercise is to prepare a trial balance. Regarding the trial balance, I'd like to mention that the title should be as it is, the name of the company, Cantwell Architect, the term trial balance, and the date, it is on July 31, 2014. However, to prepare the trial balance, we have to list all the accounts used or stated in the general ledger and in their final balance. So we have to follow the order of the accounts in the trial balance, which are we start by assets, then liabilities, capital stock, retained earnings, dividends, revenues, and then expenses. Assets in this exercise were cash, accounts receivable, supplies, prepaid insurance, automobile, and equipment. and we put the amount of these accounts in the debit since assets have debit normal balance. Then we have liabilities, notes payable, accounts payable, and these accounts are in credit since they have a credit normal balance. After liability, we put the capital stock in the credit as well since it has a credit balance also. Then the revenues, we have service revenues and in credit as well since it has a credit normal balance. Then the expenses, which are rent, advertising, miscellaneous salaries, and utilities expense. Expenses are in debit since they have debit normal balance. In this exercise, we don't have retained earnings and dividends since no need to put them in the trial balance. And finally, we calculate the total of the debit column and the total of the credit column, and the debit and the credit should be equal. You can solve exercise 5, page 22 on your book, and it is similar to the previous two exercise. So please do solve it by yourself, and please, if you have questions regarding this section, please refer to your instructor.